Okay, guys, it's your boy Nick, HOUTX Trader, right here in Houston, Texas. This is the second video because the first video, the sound messed up. So sorry for that. If you're seeing this video, hopefully the sound's better on this one. Again, guys, this is for training only. It's not financial advice. If you need financial advice, please go see a financial planner. Also, we're only looking at Solana. I had somebody ask me for a Solana markup, so I figured I would just start top to bottom and go through the process of how I would look at a chart, any chart in this particular situation, Solana. So here we go. Before we start, let's share my screen real quick. Let's share screen numero trace. And I think it's sharing the right. I don't like it when it says that, but okay. Anyways, this is my dot card, guys. Here's my public Discord, guys. I have my own Discord now where I post more in-depth trading analysis. My YouTube, which you're on, my X, Instagrams, you can see it. Pip Connect, that's a paid service for Andy Peters. I have no financial interest in that whatsoever. It's just I'm in that group. Bored Ape Solana Club is the NFT that I love. That's my boy Dak Days. BitDogs and Vtopias are also two NFT groups that I'm in. I post a lot of trades there. I post a lot of insights there. Buy an NFT, you have direct access to me. Hit me up. And here's the broker that I'm currently using is Carbon Capital. Okay, guys. So now that the housekeeping stuff is out of the way, let's go straight into the charts, which I should have already had open. Here we go, the charts. Okay, Solana. What I'm going to leave all those markups over there from earlier, the earlier video, but basically what I wanted to show you on the daily is that as you can see, we're obviously in an uptrend. What I like to do on the daily time frame is go to my line chart, and when I'm on a line chart, let's just hide everything. I can see that on a line chart, I have these tops. Okay. That top kind of coincides with this bottom right here. So what I'll do is I'll draw a horizontal line like halfway between this top and this bottom, like right in this area. Okay. So when you see that blue line, that's what that is. I've drawn it right in the middle of those two. Okay. So now let's go back to our candlesticks. All right. As we can see where that blue line is, all these wicks are here. So I mean, it's clearly a support. So sometimes support turns into resistance, and that's letting me know where that support is. Let's go to the 4-hour time frame. Matter of fact, I'm going to delete these, just clear it up, and we'll get there. All right, let's just delete all of it. We don't need it. Okay, so on the 4-hour time frame, what I'm seeing then is two different types of Fibonacci's we can draw. Okay, we can say that, okay, that this is the bottom right there, and then we took off. Okay, so we're going to say that, okay, well, we can draw one Fibonacci from there. So let's go from Fibo from here to there. Okay, we see that the 61.8 is right there. That's the magical Fibonacci number, 61.8. But I also like the fib from the bottom where price took off to the top. Sorry, that first fib was probably wrong. Let me redraw that. From there to there, 61.8 is right there. All right, 61.8 right there. Now let's move this fib to the bottom of this current move. The top is the same. Now let's come down to like the 1 hour. Okay, so this is kind of the fib that I want to work inside of because this is the move. When you have a move that's this strong, it's not necessarily going to come all the way back down and use this bottom as a Fibonacci starting point. So I'm going to use this bottom as a Fibonacci starting point. Again, you have to be able to just to look at the chart and think, okay, like what is more probable? What do you think is going to happen? You think price is going to come break all of this, come down to this area, and then pop off? It very well could. It very well could. Or is this move so strong that's probably going to come down into this area and then pop off? All right. So that's kind of the decision we need to make. If this move right here was not so strong, then yeah, I can see it coming back down to here first. But look at how much power that is, how much strength that move had. Therefore, I don't think it's going to come all the way back down. Okay. This is why when you trade or when I trade, I have a lot of set of rules, but you also have to be able to look at the situation and say, what is more probable now? All right. You have to be a little bit flexible. Okay. So now that we're looking at the 1 hour time frame, remember my red line was a 61.8 on the much larger fib. Well, guess what? That 61.8 is sitting right there where the 78.6 is. I like that. Okay, that's giving me some confidence that the 78.6, that this area is a good area. Okay, so I'm realizing that I can delete this 61.8 line now because we basically know it's where the 78.6 is. All right, so what else do we start looking for? Well, we have an order block right here, right? We have the bottom of this bull candle, bear candle, the top of this bear candle. In this area is where the orders were put in before the price took off, right? The candles were put in here, and then wham, price went through the roof. So I marked this off then as my order block, okay? What else can we see? Well, we're looking for fair value gaps, but the problem with this fair value gap is look how big it is. So we're not really going to be using a fair value gap in this situation because it's just too big and it really doesn't give us anything. The only thing that it does give us is confidence that the market is going to come back down, fill in some of this area, if not most of this area, and then continue on its way upwards, right? So we look at the fair value gap, but I'm not really using that for my trade entries right now. Let's go down to a little bit smaller time frame and let's figure out if we know that we want to buy in this area down here, let's figure out where, okay? Why? Let's narrow this down. So on the 15-minute time frame, I do see that there is a sell candle hiding right there. It's what I call a virgin sell candle. I call it a virgin because the market left has not come back down to it, right? There is nothing here that's touching this candle. Whereas, let's say you look at this candle right here, these candles. The market pushed off, but guess what? It came back down to negate those candles. So this is no longer virgin. This is no longer virgin because of all this price action, right? So we have to be able to look at candles that are untouched. And so for me, that's this candle right there. All right, so there's my candle. I'm going to mark that off with my uh, Fein, my Fibonacci gain fan, just so it's a different color. But there it is. Okay. I'm just going to drag this out to over there. There it is. So there's my order block. We look at the order block, we stretch it out. I have the 50% of the order block marked off right there. And that's at the very top of my sell candle, which is at the top right there. Okay. That looks good to me. Also, if we look at my buy zone, as you guys know that I like to mark off 78.6 and 88.6 Fibonacci's. That's my buy zone, right? Half of the buy zone, you look just visually, is right there as well. Okay. So now we have half of the order block. We have the top of the sell candle, and we have half of my buy zone. So for automatically, I'm thinking, man, it would be nice if we bought right there. Stop loss is always below the low. For me, it's 10%. And my target, TP1 would be right there. All right. As you see, I already have it marked off as TP1. So now we have to continue to build, continue to add some things to this. Okay. So as you guys know, I love looking at Elliott waves. We have a first push down. I'd like to see a deeper retracement. See this little virgin buy candle, and then a second leg retracement, and then a third leg. If I can catch a third leg right there in my buy zone, then I'm going. I'm taking that buy. Now, how do we sweeten that up? Again, we're adding confluences. Now we're looking into the future. Okay. But if I can catch a Fibonacci move, let's just say, let's mark it right here. If I can catch this second leg and it retraces, and then I look at the TP extensions. Again, this is looking ahead of time, but I'm just making a plan. And I look at my extensions on that TP second leg, the B leg, and the extensions are lining up in my buy zone. That's giving me further confidence. Okay. So that's a little bit of looking into the future, but I want to have that plan for when it gets here. Okay, so let's just look at this sell Fibonacci, top to bottom. All right. Look at this 236 extension lines up, I mean, almost to the dollar with the 50% of the move. Okay, so now that's telling me that there's a very strong possibility that the buyers are going to sit right there and look to buy back up. It's perfectly okay. Me personally, I'm not taking that trade because I want a better entry. I want to buy at a good discount. Okay. I want to sell at a premium. I want to buy at a discount. Equilibrium is not. It's 50-50. It's neither a discount nor a premium. It's right in the middle, right? So I'm not taking that trade. But If I want to take a trade down here, that means I'm looking for this market to sell off all the way down here. That means why don't I just look for a very smart, responsible, planned out sell to get me down to there? Okay. So now if my brain is shifting, how can I find a sell? Okay. We can delete this Fibonacci because we already know where it's at. So let's look at this sell Fibonacci. Top to bottom, there's the candle where it moved. There's the bottom. Well, what do we do, guys? We mark off our sell zone, 78, 88.6, right? Sell zone. Okay. What else do I see? I mean, this looks to me clear as day. Um, I see, let's just use what tool we're going to use. Let's use this one. Top of that buy candle, that bull candle, right there. The top of that buy candle is right on the 78.6. So wouldn't it be wise, or at least as far as risk to reward is concerned, to try to take a sell there? Now, I understand that we're going against the momentum, right? So we have to really respect our stop loss and how much we're risking. We're not going to go ham 10% on this. That's the 1% risk trade, right? We're not going crazy. We're not risking 5%, right? And then we start to target these extensions down here for our TP and ultimately leave a runner to maybe come all the way down to there. Now, if we can catch that, it's telling you right now 5.86 to 1. It's almost a 6 to 1 trade. So I'm willing to risk 1% for an opportunity to catch much, much more, obviously more than that. So look, we have the fib, we have our virgin buy candle that needs to get mitigated. And then also, I mean, if we just look right here, look at the fair value gap. You have the bottom of that candle. Some people use wick to wick, right? I mean, there is a pretty small fair value gap inside of there, but there is one. That wick does not touch that wick. There is a little gap there, but you can also probably go down to a little bit smaller of a time frame and see that. Look at how strong that is. The market took off from there to there and retraced, but it left a lot up here, right? This has not been touched. So some people, and I'm not saying me, but some people will do is, they'll look at this area from there to where it did retrace and mark off 50% of that. Well, 50% of that is the 88.6. Again, if we take a sell at the 78.6, our stop loss is above. Even if it decides to run up to the 88.6 to reverse, that's okay. We're in a little bit of drawdown. That's perfectly fine. That's acceptable. We just don't want it to break this, and then because if it breaks that, it's probably all-time highs, right? So we have to take a very calculated trade. So for me, if I was to look at Solana and trade Solana, which I might just do, um, I would be doing that. That's what I would be doing. I'd be taking a sell right there. So I'd be entering the sell at 239.17 right there in that area, right? Put my stop loss up here at 243. Again, that's not crazy. And I'm looking to take that all the way back down to 217. Now, maybe you're a more patient person. Just wait for the buys. Okay, just wait for the buys down here. What you want to see then is we have the first leg of the Elliott. We should see a good push up, and then we should see another push down, then probably a push up and a push down. So then what you can do, like I said a second ago, is measure the Fibonacci on that second Elliott wave, right? That'll give you a TP somewhere down in this area. And then now you're adding to your confidence to take the buys back up. Look at the RSI, look at candlestick patterns, look at whatever, but that would be the game plan. But so for me, if I was to trade this, I would sell up here, the very responsible stop loss, all the way down here, and then jump right into buys down here. Now let's talk about one other thing. Let's just say that you're wrong and you do take this you take a sell here, but it doesn't do that. It breaks, and it breaks your stop loss up here. Then what do? Go directly into buys. So if I'm going to put a stop loss right here, I'm putting a buy limit right there, right? Putting a buy limit right there. Now I'm going to just figure out some sort of stop loss down here. Perhaps, once it does this, it'll do one of these little deals and goes, and then I could use, the bottom swing as a stop loss, right? So I don't really know the stop loss is going to be right now because the candles have not formed, right? But if you're going to take that L, flip it, and go right into buys, and a good thing that just happened to me the other day, and I showed it live with my NASDAQ. Okay. Daily, okay, I can't remember where it's at, but I think if you go back and look at the charts, I was buying right here, right? Now trying to catch that up, working off this order block right here. And it took an L and it took off. So what did I do? When I took that L, I went straight into sales because I knew I was wrong. There was my stop loss. Let me just zoom in so you can see a little better, right? There was my stop loss, and then just smash the trade. So whatever my stop loss was here, however many pips I was, is kind of just what I risked right there. As you can see, it's about the same, and made back my money plus some. Okay, but that's Solana. That's what I think is going to happen. I would be looking for sells right there with a buy stop just above it in case I hit my stop loss. I flip directions, go right in the other direction, or you could just be patient and catch the buy down there. All right, that's all I got. Hopefully the sound works well. Hopefully the chart showed up good. Guys, only thing I ask is that you follow, like, subscribe to videos. I don't sell anything. I'm not partnered with any other companies. If you see me asking for money or see me promoting some of the website that I partner with, it's all scammed. It's all BS. It's all for free. I'm never asking for your money. The only thing I ask for is you hit that smash that like and subscribe button. If I get enough of you guys, YouTube will pay me. I don't need y'all's money anyways. So you guys have a good day. Have a good night. If y'all have any questions, please hit me up. Spread the word. Take care. Have a good weekend. Much love. Out.